Today we need to talk about Beyond Meat stock, because what's happening right now is quietly becoming one of the more intriguing setups in the small cap space. After the explosive moves earlier in the week, BYND has now closed Wednesday's session at $1.25, down just 4 cents on the day, and only about 3% lower. But the big story is this: despite a major 2-day spike and significant volatility, the stock has held its price. It hasn't given back the entire rally. It hasn't collapsed to new lows. Instead, it's consolidating. And for a stock with this kind of short interest, that kind of consolidation can be meaningful. In this video, we're going to look at why the price holding up is actually important, whether BYND is positioning for another short squeeze attempt, what the absence of fresh news really tells us, and the exact signs to watch for if you're trying to understand whether another explosive move could happen. This is not a hype video. This isn't about pretending Beyond Meat is turning its business around overnight. Instead, this is a clear look at the psychology, the mechanics, the momentum, and the trading dynamics that have brought BYND back into the spotlight. Let's start with what we know. 3 days ago, BYND suddenly ripped higher, jumping more than 16% on a day when major indices were red. It was a classic breakout move, the kind that grabs the attention of retail traders, squeezes shorts out of their positions, and creates a feedback loop of speculation. Then, on Tuesday, the stock exploded again, hitting intraday highs of around $1.40 before pulling back. That move brought in more volume, more attention, and more volatility. But then Wednesday brought something different. Instead of collapsing, instead of giving all of it back, BYND held its ground. The stock closed at $1.25, well above where it was before the 2-day spike. And this type of consolidation is exactly what you see in stocks that are not done moving. This is something you often see in early-stage squeeze cycles: the initial pop, followed by turbulence, and then a leveling out period where the price base shifts higher. The big question today is this: is Beyond Meat's price action telling us that the stock is positioning for another move? Is there enough short interest, enough momentum, and enough trader psychology left to set up another squeeze? Or is this just a breather before the stock resumes its long-term downtrend? To answer that, we need to break down the forces driving the stock right now. The first force is short interest. Beyond Meat has consistently been one of the most heavily shorted small-cap names on the market. Short sellers have targeted the company for years because the fundamentals have deteriorated, revenue has declined, margins have contracted, consumer demand for plant-based meat has softened, and the company continues to post large losses. These conditions typically encourage short sellers to stay active, and that sets the stage for volatility. But the same thing that attracts short sellers is the thing that attracts speculators, because a stock with high short interest becomes a potential rocket the moment momentum starts to shift. When price rises quickly in a heavily shorted stock, shorts are forced to make decisions: cover their positions, reduce exposure, or double down. And when you combine high short interest with elevated retail interest, you get exactly what we saw in the last few days. The second force is volume. Monday and Tuesday delivered enormous trading volumes, far above the average for BYND. These were not long-term investors accumulating positions. This was fast money, day traders, speculative momentum traders, algorithmic systems, and forced short covering. But when that type of volume leads to a surge, and that surge holds rather than collapses, it can create a second wave effect. Which brings us to the third force: consolidation. Consolidation is often misunderstood. When a stock spikes and then trades sideways at a higher level, it usually means one of two things. Either buyers and sellers are finding a temporary equilibrium, or the market is preparing for the next move. And in the context of a squeeze setup, consolidation can be a sign that shorts are hesitant to re-enter too aggressively, while traders are still watching for the next breakout. The fourth force here is psychology. Beyond Meat is a brand name. Even if the fundamentals are deteriorating, even if the company is struggling, retail traders recognize the name. And in an environment where traders are constantly searching for volatility, liquidity, and potential upside, a stock like BYND becomes extremely attractive during moments of speculative activity. The familiarity factor matters. Traders know this story. They know the past. They know how violently BYND can move. And that recognition alone can pull in more speculative volume. Now, let's address something important. Is there any actual fresh news? The answer is no. Not in any meaningful way. There is no new earnings report. No new partnership announcement. No new distribution deal. No restructuring update. No analyst upgrade. No improved revenue forecast. The business remains fundamentally the same as it was last week: shrinking demand, a difficult market environment for plant-based products, and a balance sheet that require dilution to stabilize. So if there's no new fundamental catalyst, why hasn't the stock collapsed after the initial squeeze? The answer lies in the mechanics. When a stock with high short interest surges, the forced covering can push the stock higher than anyone expects. But what happens next depends on the behavior of the remaining shorts. Sometimes, shorts immediately reload and push the stock back down. Other times, particularly when volume remains high, shorts become hesitant. They want confirmation that the momentum has faded. That hesitation can give the stock time to consolidate. And that's exactly what we're seeing now. BYND is stabilizing around $1.25, which is above last week's range. This suggests that some shorts are waiting, watching, and reassessing. Meanwhile, retail traders are watching the price and seeing that it hasn't collapsed. And that creates a very specific setup, one where the probability of another squeeze increases if momentum returns. So what would another squeeze require? Firstly, it would require another spike in volume, not just a small increase, but a meaningful surge that signals renewed speculative interest. Secondly, it would require a trigger, something that causes traders to rush in. It could be a technical breakout above a key level, such as $1.35 or $1.40. It could be a viral social media push. It could be a sudden burst of call option activity. Or it could simply be the continuation of the same momentum pattern we saw earlier in the week. Thirdly, another squeeze would require short sellers to react. Squeezes happen when shorts are forced to reduce positions, not just when buyers enter. If shorts become too comfortable, the stock won't squeeze. But if the price pushes into an area where shorts feel pressure, that can quickly change. Finally, another squeeze would require that the stock does not lose its support zone. If BYND remains above $1.25, or at least holds the $1.20 level, the setup remains intact. But if it breaks meaningfully below $1.15 and volume fades, the probability of another move decreases significantly. This brings us to the key part of today's discussion. What is the best interpretation of the current setup? Based on what we're seeing, the price action suggests that BYND is holding enough momentum, enough volume, and enough retail interest to remain a squeeze candidate. This does not make it a healthy company. This does not make it a long-term investment. This does not mean the business is turning around. But it does mean that the mechanics for another momentum-driven surge are still in place. If you're a trader, the next few sessions will be critical. Watch volume. Watch the $1.25 support zone. Watch for any push above $1.35. Watch the social media chatter. Watch the options chain for unusual call buying. These are the signals that typically precede another attempt at a squeeze. If you're an investor, treat this as noise. Unless Beyond Meat fundamentally changes its business trajectory, these rallies do not change the long-term story. But for now, BYND remains one of the most interesting tickers in the market. It has been volatile, unpredictable, and explosive, and the consolidation we're seeing today suggests that the story may not be over. We'll keep watching.